Okay, good morning, everybody, and welcome to the Market Watch Group Weekly Market Prep. If you're listening to the recording, you miss all the good stuff that happens before we turn the recording on. If that doesn't entice you to come, I don't know what will. All right, I'm Scott. These are our disclaimers. Be careful. We're not brokers. We're not advisors. This is the, oops, went too far. This is the agenda, posture, calendar. We just did some searching in a working session on a Tuesday night. So I think the watch list looks pretty good. So we'll take some time looking at it and see if there's any holes. If you guys out there feel like, yes, there are some holes in our watch list, great. Let's identify them. Let's fix them. No screen? Oh, okay. Hold on. What did I do? Hold on. I turned it off somehow inadvertently. Go live. Okay, now can you see it again? Or maybe I never turned it on and I thought I had. Okay. Let me back up. Good morning. Disclaimers. Agenda. And good morning, Leland. Welcome. Good to see you. You haven't missed anything yet. What are we going to do today? We're going to posture. We're going to look at the calendar. We're going to see if our any searching is required, but I believe our watch list right now is very strong and full of setup opportunities that are developing potentially for this week. We'll talk about what an early shopping list, we call it. I go back and forth. I feel like that maybe is a little bit like, oh, I just want to go buy something. And that's not what we want. So I'm trying to think of a good word. I used to say short list, and people are like, that means you want a short list talk? And I'm like, no, just short. Like, there's only a few. It's not long. It's just short. We have options here, and they're like, you're trading options? And I'm like, oh. Trading plan section of the week. We're going to go talk about, we're getting close to the end of our third pass, I believe. 8 weeks. What week of the year are we in right now? Yeah. Yeah, we're about week 23, right? That seems right. Okay, so we will look at the trading plan. We're on the second half of record keeping, which is analytics. Technically, this is the easiest part. If you've done all the work up to that point, if we've done all the definitions of rules and routines, and we've outlined everything that we do in our structure, and we've put the record keeping in place and we've started using it, this is the easiest part. All the math is done for you. I think I'm going to do a working session on record keeping again this week. What do you guys think? I've put a little bit more work into my sample spreadsheet, and I might even have time to build a second sample spreadsheet. One that shows, hey, look, this guy's doing pretty well. This is what we want it to look like. And one that maybe like illustrates a different path, just so you can kind of see what different perspectives or different results that you find might lead to different courses of action. I think that might be useful. So, do we bother with Disney? Let's take a look at it today. All right, let's dive in. Let's get into everything else. Where am I? I always have too many. I always have too many windows open. And then I also have too many tabs on those windows. But let's start with this. Oh, I mean, look at TSM. We can't leave this without first looking at it and saying, hey, TSM is a leader in, one of the leaders of the semiconductors. Semiconductors is showing ongoing strength in technology. Technology is in a renewed leadership position. The numbers add up, and just made a higher high, and it's pulling back with a dragonfly doji. We talked about the dragonfly doji comfortably above the 50-day, starting to potentially find a higher low, a support level. Well, that's our signal. We're going to trade that. I mean, it's that simple. We're not going to rush it. We've been patient, but yes, this is us seeing opportunities. Yeah. Let's look at our posture though. So our posture was a 5 for the second week in a row. I wonder if I can I'm just gonna bring this over here where I can pull it back in and then move it back. Okay. So long-term trend. Just okay, good. Very, very welcoming of you, Stephen. Leland, if you're hopefully you're seeing the screen. And if you look, you should also be able to find the chat. You can pop windows out. And if you ask questions, you'll find that the people in the group, if you ask questions about trading, I'll answer them. If you ask questions for hey, how do I find this? People in the group will help you out. So take advantage of that. But if you'd rather sit back and just listen, enjoy. No pressure. Okay, let's go to the SPY. The good old SPY. You can see, definitely listening, love it. Appreciate it. Participate at your leisure, sir. Okay, this is what we have. Whew, was an interesting day on Friday for the SPY, right? Because it opened, it dipped. The sellers are like, okay, we're down here. And then it's like, nope. And we finally got an above average volume day on behalf of the buyers. Okay. That's it for me. That's interesting information, right? We've been like, hey, where are the buyers? Where are the buyers? And when the sellers finally are like, okay, we're gonna hit it again. Wow, what a response. Yeah. Sellers opened it up. They'd been pushing it down. It wasn't much though, right? Like from this high, 533 down to here, we're 11 points. We're talking 2% now again. Back over here, this is when we got like 5, and we're saying now that's something, right? This was 2%. And when it started to accelerate to get closer to 3%, buyers just whipped it back. No. All right. So I would say that a couple of things happened. Well, let's go first here. This is where we are now with our long-term trend. We had a higher low and we had a higher high. Does that mean I'm raising the score? No, I'm definitely not. We're at a 1.5 out of 2 points. We're very close to as good as it gets. And in actuality, this potentially could be slowing down and not getting to the upper range of this trend. It can't have that score if it doesn't get to the upper end. So I think 1.5 is in a good place while we wait and see what the next trend it settles into. It might settle into a 1.25 and we'll lower our score. It might get a little higher and we say, I think 1.5 still representative. It's clear that this is up. It's clear that the institutions are well in control. This was a correction, 10%. I'm not going to say we because, whoops, let me back that out. I'm not going to say we. I'm going to say I was concerned that this was feeling very repetitive to this in a lot of instances, right? And so because of that, I was definitely cautious in the beginning over here. I traded it, but I only traded a little bit, right? And we've now uh, accomplished what I said it would need to do to make me stop thinking that was going to happen, and that is that we have taken out the previous high. That's significant. But as far as a score goes, I kind of look at this and think if I were to just give an overall assessment and just say, like, what is this thing doing overall, just to kind of have it, that's a nice steady uptrend. I'm going to give it 1.5 is fine. I might score that a 1.25, but like I said, I feel like we're in the right place until we get new information, and we don't have new information. So nothing's changed for me. Let me know. Stephen, thanks for putting yours in. I hope you don't mind. I'm going to be asking, like, hey, what's yours? So please let me know again. What did everyone do here? Anyone change theirs? Do you see it differently than me? Do you think I'm missing something? Is there a discussion that needs to be had? Or do we feel like, yeah, if you're around 1.25, 1.5, that's a great representation of the current strength of the long-term trend. Okay, good. Love it. I feel like that's part of our strength, right? Like, yeah, I'm sure it's helpful in the beginning. Like, hey, it's great to hear someone go through this and stuff. But I believe that at a certain point, then we need you all in as well to say, whoa, Scott, sorry, you're a little heavy here. I think we should dial it back. That's what I'm looking for. Would love to have it. Challenge me. Did not change yours, Steven said. Left it at 1.25. Perfect. Great. Let's drop. Let's drop it back to 6-month daily. And remind ourselves of the score. There it is. 1.5. Now remember, this is 1.5 out of 3. So the strength we see here, not as much as the strength that we were seeing it's not as much as that's a different level. And I actually, so we were a 1.5, right? So imagine this is a 1, and we could definitely see stronger trends. Then I kind of think, yeah, 1.5. 1.5 is pretty good, actually. That's a nice steady uptrend. However, because I'm in a zone where I'm like, it could be a little better, I'm gonna score this an extra 1/4 of a point. What happened there? That's a higher low, right? Our last low that we were really looking at was back here, and then it went up, and then it kind of paused and pulled back, and then it turned, and that's a higher low. I'm going to give that score. We already scored the higher high back in here. That got scored already. It didn't do anything else since then to warrant another higher score until the buyers overcame when the sellers tried to take over. Great. I'm going to give it an extra 1/4 of a point. And so that score is going to go up. All right, now I need my spreadsheet. And then I'll get this all sorted and posted. Where was that? Why can't I ever find the right window? Okay. Spreadsheet. Okay, so I'm a 1.5 and then a 1.75. Okay. What's next? Volume. We were a 0. We were a 0 for 2 weeks. So we've seen a lot of ties. Let's go back down to 1 month daily. And here's what's really, really interesting now. At this point, this, I think, is, but only that one. This was 59 over 58 million, so, and that was an unchanged day. right? This was 72 over 72. It was a good day, but it wasn't above average volume. Below average, at average, at average. This one was below average. Or, I mean, I'm sorry, above by 5%, right? A little over. Some people are like, but Scott, that's barely. So barely means what? If I barely made the plane, I'm on the plane. So if it barely gave over 105% volume, it gave over 100. It's there. So that's a negative. I'm going to score this. So the way I see this is we have one above average volume day here, and I'm going to score that for the sellers. And one above average day here, I'm going to score that for the buyers. And remember, a tie, 1-to-1, tie goes to the buyers. This is the first time we've had a tie in a long time. The sellers have had more above average volume days throughout this little test when the correction was potentially forming. This is the first time. Am I wrong? Tell me if you think I'm wrong. But to me, in my evaluation, this is the first time that we've had a tie. It's 1-to-1. And that means I'm now going to give this a positive score. Tie goes to the buyers. We expect inherently more selling on down days. So I'm going to give this a 0.25. Now the litmus test for this score. This is my starting point. This is my ending point. And if I draw a line to connect that, that's positive during this period of time. So is it out of line to think we're scoring a 0.25 for volume during this? If I had a 0.25 and my line was sideways, then I might be like, ooh, I don't know. I think I might just drop that back to 0 here. Right? But it's not. It's positive. So I feel good about this. I'm very curious, though, how you guys saw it. So please weigh in now. I'm going to bring my chat back up. Ah, press, I was going to say exactly the same thing. He said, and the buyers are more recent. We always think about the freshness, right? If it was the other way around, I would still score for the buyers, but I would agree that those are different perspectives. One's stronger than the other. Buyers fresher. I 100% agree. Great observation. Thank you for saying that. Love it. Love it. I was like, it's so funny because I was going to say that and then I forgot to, and then Press said it for me. You guys are amazing. Okay. So let me put that score in. I'm telling you, as we build the group out, and that is coming, you know, we have not wanted to rush. We've been working to really get the product the way we like it. That's why I've been working so hard to try to gain or gather feedback as we go and make sure this is all right, what we're doing here, before we open the floodgates and get more people in. But I think there's going to be such a great dynamic among the group as it grows without the need for me or Glenn, right? Where you guys are just like, yeah, hey, this is spot on. And sometimes it's just the validation where it's like, yeah, okay, I need to hear someone say, that's how I see it too. Okay, so volume we are going to say is a 0.25. Let's get to our sector rotation. Make sure this is up to date. Ah, amazing. Press, thank you for letting us know he shut down the put at exactly the right time. Just it's beautiful, man. Love it. Okay. I'll tell you one thing that's funny is that, so here's what's funny. That litmus test that I put on there, That was forced on me by a trader, a student trader that I was working with. And there was a time where it was out of whack. And he said, wait a second, Scott, look, literally, um, he said, look, if I draw a circle here and I draw one here and I connect the dots, it's up. But the score is negative. And I'm like, yeah, you're right. You're right. If you do something simple like do this and connect it, you're like, why am I assessing sellers in control when they're clearly not by price? So it's kind of like price. We give the volume its ability, and then right at the end, it's like the judge who's like, yeah, like there's times where they nullify, right? Where they're just like, no, sorry, that just can't be. That's the way I see it. So yeah, I liked that. That's probably one of the newer adjustments to this analysis. Probably 3 years old, 4 years old, and it was not one that I came up with, right? So that's why I encourage the free flow of discussion and information, the exchange of ideas here. We'll improve each other. I'm still learning. I'm still a student of the market. The market is a punishing, exacting teacher. So we try to learn as much as we can here together. That's the objective. Let's see what we think about the major markets. Major market. Okay. NASDAQ leadership at the top. S&P watermark in the middle. Dow, Russell vying for a lagging position here. We know that the Russell kind of like sometimes surges and then eases back and sometimes surges. This is enough to be bullish, but bullish at like half, right? I can't give this a full bullish score if the Russell is not participating. So that's important. But as we change perspective, let's zoom in. The market's a fully loaded freight train and we are not, right? That is so true. Okay, here you can see, okay, when we see a shift, the shift is that the Russell has moved into a leadership position, not leadership ahead of the watermark. So it's like it's better than the Dow, but it's not like leading. So this is more like, okay, it's a little stronger than the first perspective. Now we zoom in and get to our scoring perspective, where we're like, okay, this is leading to bullish, but does it hold or does it drop back? Okay, it holds. The NASDAQ at the top. Now here's the thing. By the time we get to this point, everything that we see here is almost in exact parity, if you think about it. Look at that. They all started here and they ended all mostly here, and a couple were down here, but overall it's mostly sideways through that, right? So really, what are we scoring? We're scoring from the April 17 lows. That's what we're looking at now. Who's in charge? NASDAQ, S&P. Third is the Russell. Last is the Dow. That looks good. That looks very good. It's not a 1, but it's a 0.75 for me. For it to be a 1, the Russell has to get over. The Russell has to get over the S&P. That's it. Otherwise, as long as it's ahead of this, as long as it's ahead of Russell's ahead of Dow, I'll score it positively. So that one's unchanged for me. I don't need to look at the 22-day to score it, but I always want to see the 22-day because that's what's coming down the pipe. Sometimes what's coming down the pipe is necessary to score what we have, But sometimes it's just like, okay, well, is it more of the same? Just because, Preston, I agree, right? And what do we have? An exact replica of what we just scored. NASDAQ on the top, S&P in the middle, the Dow or the Russell ahead of the Dow, but behind the S&P. So this, we're not expecting it to pop on the other until it pops here. It hasn't yet. It's close. It could. But this, to me, further confirms 0.75 is right. Right? That's the lineup. This slice is just a further representation of the previous. So I think our score is right there. I'm a 0.75. Looks like Steven's the same. Anybody have theirs different? What does this mean? That the market has a good appetite for risk. It wants risk. If it's when the general investing public is bullish, what are they thinking? Let's make some money. Where do we go to make money? We don't think, hey, let's go find ourselves some fantastic, enormous blue chip stocks that don't grow very quickly. Wait, what was that last part? That doesn't grow very quickly. I'm out. This is a bullish market. What do I want? Give me some tech, some things that are going to move. What grows fast? Small caps can grow huge in a small period of time, right? Except for what? Well, the interest rate environment. Low interest rate environment, hell yes. So that's where we keep getting the small caps are getting yanked a little bit. Every time we're like, oh, when are those cuts? They need the cuts. They need the cuts bad. So, yeah, I think we're good here. Let's go look at the, let me put my score in here. So this is going to stay the same at a 0.75. And is this all of them? Yeah, let's see. Nope, I need all of it. That's 6. 1, 2, 3, 4, 5. I didn't do enough. Here. Okay. 4.25 to go. All right, yeah. Let's go look at the sectors. Let's go look at the sectors. Here, technology, top. Looks good. Back where it belongs, at the head of the table. And it's right-hand man, communication services. Like, yeah, right-hand person. Right there with them. Financials. Oh, rounding out the big three. I'd love to see that starting point. Then we drop down here. Industrials is there, but also utilities and materials. So, okay. Now, let's dive in. Let's go to 133. Bing, bing. Oh, this is a little less clear. Little less clear, but here's what we have. Financials, utilities. Oh, good Lord. Utilities, what the hell? What the hell, utilities? Communication services, good. Industrials, good. S&P. Okay, so that's mostly good. You'll notice that technology is not there. So tech is what got shook from this perspective. But also energy is not there. So this is interesting and community. I mean, look at discretionary is like, oh, we don't know what to do with ourselves. 66 days. Then we get to God, what is going on with sector rotation, you guys? I was thinking we were going to see something here, but my goodness, utilities is just like nestled at the top. Energy. So we have defensiveness here and we have inflation here. I think I'm going to have to leave. Am I a negative on this? I am still a negative. I'm a minus 0.25. Um, okay. I kind of feel like it hasn't done enough to change. I think I remember Steven telling me this last week on Friday that he gave it a sneak peek and is like, it hasn't shifted. We thought it might, but it's like it's stuck. Am I wrong? Talk to me. Talk to me, people. Am I wrong? I'm leaving mine at a minus. I don't know why I thought it might get better. Steven's a minus 0.25. I'm a minus 0.25. Standy agrees. Is the market toying with us? What the hell's happening in the sectors? Here's the thing, though. It's a minor enough one. You guys remember those old Panasonic the commercials with the dog and the phonograph, and the dog cocks his head to the side. Like if you have a dog, you know that little head cock. Like I call it the what the hell look, right? Like I'll do something funny to my dog and he'll cock his head like, what the hell? You want this? You want the smoke? And I don't. But that's what I'm doing with this. I'm cocking my head to the side and I'm like, what the hell? But I'm not. I don't think we need to react yet. Um, Steven says, but wait, Scott. But wait. It's a mixed bag. We score each category as we seize them. That's it, Press. We have to. That's the point. Is sometimes something just sort of is sticky, and that's good, right? And that's what has you like, okay, all right, let's see how this plays out. Let's go to the 22 is what Steven said. He said, go to the 22. It's looking better again. And there you go. Little ray of sunshine, technology. If I was on the fence and I was like, I'm thinking I might leave it the same or I might score it a 0. I might raise it to a 0. And then I got here, I'd be like, yes, I'm going to raise it to a 0. I'm on the fence. This is going to push me over to the other side. I wasn't on the fence at all. The 66 day looked like shite, man. Like, come on. I was a little disheartened, in fact, where I'm like, isn't that getting better? Why isn't technology popping back up there? But it is. It's just taking a little bit, right? Okay. That's fine. It tempers our score. Great. Let's go finish this thing at the VIX. Any questions? Anyone disagree? Let's pull back. Leland, feel free to ask questions on your part if you want. And before we wrap up here, I'm going to show you where you can go. I don't know if you've seen it, but I'm working on filming a tour of our Discord. But there's a couple of channels that has just a bunch of resources available for you to just dive in at your heart's content. We've got all kinds of a video education trading course, options course, there's all kinds of stuff. We've got resources, trading plan outline, record keeping spreadsheets, market posture spreadsheets, links, all kinds of stuff for you. So don't let me forget when we get to the end, I'm going to pop in there and show you that. Okay, so let's look at the VIX real quickly here. Okay, so the VIX actually, it's interesting. I think I'm going to score this down a quarter of a point because so here we go. I was 1.5 points. Now over here, Leland, you can see the scale is in the parentheses. So that's 2-point scale. I'm at 1.5. So we can get stronger and definitely get weaker. But what happened was we busted out of a line of consolidation. We broke this line of consolidation. Now that in and of itself wouldn't have been enough, but we took out this high, right? Am I wrong? We took out this high. That's a higher high. That's a higher high. That's going to drop my score a quarter of a point. That's how I see it. So ultimately, I think we're going to be stuck for another week. Not surprising, right? Not surprising. So I left this at a minus 0.25, and I'm going to drop this to 1.25. Okay, I still went up though. Our short term went higher, our volume went higher, our sector went lower, and we're up a quarter of a point, 5.25. That's a good score. That's a bullish score. It's not a 6 or a 7 like we were in December and January and February, right? Like it's not like, yeah, let's get chips on the table, but it's enough to get some chips more than it was 2 weeks ago, 3 weeks ago when I was a little bit more reluctant. Now I'm like, okay, this is where we stop thinking. Market says take a little more risk, so I'm gonna take a little more risk. There's plenty of trades available. That's how I see it. I'm a 5.25. I'm up a quarter of a point, which to me is soundly bullish. So now that we have our score, curious about this week's event calendar. You're talking. Where are my windows? You're talking the economic calendar, yeah? Let's take a peek. Let's take a quick peek at the economic calendar. It's first week of the month, which we know means what? Employment, right? Employment. So nothing much on Monday. Nothing at all, really. I don't see anything in here that is going to have the potential to disrupt. You can see everything's expected to stay about the same. Tuesday, factory orders down a little bit, to be expected. Job openings down a little bit. Now remember, I did a little research on this. I went back and looked at job openings pre-pandemic in a good labor market at the time, prior to the pandemic, good economy, good labor market. What were we seeing? It was like 3 to 5 million at most for job openings. And we're still at 8. So I see this as still, eventually some of those jobs that haven't been filled, businesses are going to start realizing, oh, you know what, we're fine. We don't need it. And then all of a sudden that job opening is pulled. And as that happens, that eases the numbers that we see and it gets back to a normal. But I don't think we're there yet. I think we're still in a post-pandemic inflated job openings. This is one of the last remnants of things that were impacted and haven't gone back to normal. So, but I don't think this is going to have much impact. ADP, this is private payrolls. Private's expected to drop, but only by like 5%. I mean, it's not, we're still at 179. Anything above 150 is kind of my threshold for that's expanding. That's not a contracting labor market. That's an expanding labor market still. It's still growing, still healthy. Productivity, services, deficit. There's a little bit of stuff in here. Thursday, jobless claims. We're not even sniffing 250, let alone seeing 3-4 weeks above 250 that would produce a 3-week moving average above 250,000. Not even close. There's no concern in jobless claims right now. And that's usually where we're going to see things first. This starts to ramp up, and then all of a sudden the next ADP number falls a little bit. And so we're watching these things, but right now, everything that we're seeing here, for me, still looks healthy. And press, if I gloss over an area of concern that you were like, ooh, I read something, or I'm curious about this, bring it up, man, because I'm focused definitely on employment. But if you've read something that says traders are looking at something else, we need to get it on the table and chat about it. Friday finishes obviously with the Department of Labor non-farm payrolls. That's this one here. Also expected at around 180, which is above 150. That's still a healthy, expanding labor, keeping us at a 3.9, right? Keeping us at a historically low, under 4% unemployment rate. I think this supports bullishness. I don't think there's much in here that leads towards a Fed discussion, right? I mean, this is just like, hey, as the market, other than if it's still strong, then the Fed has what it needs to hold on a little longer, right? Okay, last thing here. Let's go to the Fed watch. June is less than 2 weeks away now. 10 days. 95%, it's not happening, right? Agreed. There's just no chance. July, 85%, it's not happening. This is hope, right? All of a sudden, what's this? These guys are smoking crack. September, 50-50. Ooh, look at that. 50-50 with all of a sudden just a very slight nod in favor. I don't know. I feel like I'm just a November guy now. Press has convinced me that I was a little bit too much in thinking the Fed would come through. Although to be fair, I have always supported that they're not going to do it until the data supports it. And once we hit stickiness, I'm like, yeah, no, they're not going to do it. They're not going to do it now until either A, the inflation drops, or B, weakness starts to show up. And you know, if that happens, we're going to have some nasty reports first. So I don't think there's any way they raise it, even though you hear a few people like, I'd be willing to raise it. I think they're just trying to get headlines out there for themselves. Maybe we'll get some information from the esteemed Sir Arthur Goolsbee. Not Arthur. I want to call him Arthur. It's Austin. I know. Sir Austin Goolsbee. It should be Arthur. Am I wrong? I don't know what his parents were thinking. Okay. November. It's not even by that much, but that's the first time that you legitimately have higher probability. We go to December. And interest rates are up in the air, right? Let's get to the watch list. Steven says he's more conservative than me. I don't know. You know what's funny is I'm a pretty conservative trader, all things considered. And it's funny because people are like, you trade options? That's so risky. I'm like, what are you talking about? It's not risky at all. It's as risky as I let it be. But okay. And people see me as like, oh, he's so aggressive because I trade options. But options doesn't make me aggressive. Options means I've decided to learn and trade options. The amount of risk that I take is what makes me risky or not. And I keep my risk levels in check. I keep that chimp locked up. So, yeah, the problem with people have with options is they all have an Uncle Harry. Uncle Harry did it one time. He lost everything. What an obsolete story. That just doesn't mean anything. What do you mean? He tried it one time. He tried an option and he lost, and that was it. Okay, that makes sense. That's how it went down. Watch list. Let's get through it. Watch list. Apple. Apple's still, I think, viable as a continuation trade. It still hasn't had its first good hike in Ashi yet, so it's like it's revving up. I think it's viable. ACB is knocking on that 50-day moving average door. AIG gave a signal on Thursday, but I would say still has some possibility if you wanted to jump in, but there's more coming from financials. AMD, I'm watching it, but I'm not interested. You saw TSM, right? I mean, AMD, TSM, that's really where I'm focused in chips. Amazon, a little disappointing, and that is not helpful for consumer discretionary, for the biggest, baddest guy on the block to drop below the 50-day. AXP, valid on Friday. Did anybody take it? Let me know if you jumped into anything financials on Friday. But that was definitely a valid trade. Depending on how much financials you were looking for, you might have started. We talked about that on Friday. We said, right, you're going to see some signals. You might start taking some things, but that there's additional signals going to come through the week. Well, some people might say Boeing, that's a higher low. It broke the 50, got back below it. But yeah, if you can separate yourself from the literal incestuousness that had occurred in this company. Once I saw that expose on Boeing, I've never seen him the same since. So I'm out. But I'll keep watching it. Bank of America, look at that one. It was setting up and then just took off. Not a real good chance to get in. Citi, great. If you miss some financials, great. Here's Citi, all lined up, ready to go. Right? I'm looking at this one for tomorrow. Caterpillar, it's below the 50, but it's still a higher low than this one. So I'm actually still like, I might take that on for an industrial. We had some setups and some new stocks in the consumer defensive, and they sort of just popped. So I'm not sure. Like, if this opens back in here, there may be an opportunity, but that was kind of a big jump before given a chance to get in. CMG, the 50 for 1 is coming up. It's going to make that much more tradable. CNM, setting up looks great. Only problem is I'd trade that if it weren't for earnings, right? If it weren't for earnings. Oil down, love to see that. Costco, I'm looking for a pullback, but I don't think it's going to, I don't know. Maybe at the end of the week this gets closer. CRBG, yes, setting up. I think Delta had a weird gap down, but it gave a signal. Diamonds had a big day on Friday, but under the 50s still. EQH overextended, nothing there. ERJ, this is industrials. No, was this industrials or discretionary? God, I can't remember sometimes. Let me take a look. Let me look at this thing. Economic data? No. Watch charts. Analyze. Fundamentals. Industrials. Yes, I was right. I knew it was industrials the whole time. I like that. It's a nice looking setup. It's pulled back. Volume's low. Little hammer. Ready for this turn. Right? Looks good. FCX. Kind of in the middle. Bitcoin. Same thing. GE. GE looks like it's maybe going to try to turn again. It's gone a little sideways, but it looks okay still. Gold down. Google. Oh, Google's on my list. Google's on this nice little retracement. Looking anywhere in this range for this thing to find some support and give us a trade. I'm definitely looking for that one this week. HIMS is new, overextended. Nothing we can do but watch. We did start watching it right around here, but it was just too early. I can't trade early on things that are new. I got to watch them for a little while. Make sure that they fit in with the group. You know, it's a trial period at the beginning. You're not going to get traded in your first week or two. Come on. That's just unrealistic expectations. You're lucky you got invited to the table. IWM, maybe bouncing off the 50. KBH, same thing. That looks viable right there if you like, out of industrial / consumer. Coca-Cola, that was a new one. I thought about it, but I'm like, you're new, and then boom. Boom. Meta. Yeah, no, I like Google better. MFC financials, that's another one like Citi that's still viable if you were looking for one because you didn't get what you wanted. MMM, viable. That's the one I'm looking at that I'm thinking, you know what? If I'm going to take one, that might be it, especially if I can catch it just on a slightly lower open and then ready to go. Love it. Morgan Stanley, another financial. There's plenty. You didn't miss anything. Some left a little early. Some are still ready to go. Microsoft, setting up. Look at that. Look at that hammer. That's a hammer for you right there. Looking for this thing to bounce off that 50. Yes. Micron. Micron's not bad. I like TSM better. Micron's not bad. If you like Micron, right? That's a strong chip stock. Netflix, strong. Pulling back, waiting for the setup. NVIDIA, pulling back. That's expensive, but it's a beast. A beast. The Qs look good. If all you wanted to do was think about trading a little bit in the tech market without picking an individual stock, this is always a viable option. RTX. Yeah, RTX looks good. I mean, that might have been it right there. SPY. We know what's happening there. Here's TSM. That's a leading candidate for me. The dollar. We're watching this because this is kind of like right in the middle. And you can see just like hovering now. Okay, we're sort of forming this base on the dollar right now. If we break the base this way, I'm concerned. That's my concerned face. If we break it this way, boom. How's that for technical analysis? Hmm? Yeah. I'm going to make up a new indicator that it doesn't give like green arrows, it gives smiley faces. Oh, look at that. I didn't know you could do that. Watch this. If I close this eye, it hides everything. And if I open it back up, what a magic trick that is. Oh, goodness. Disney. Let's take a look at Disney. Why do I use UUP for dollars value? I use UUP just as an index. It mirrors the dollar index. So, I mean, I could put that up, but I just use that because there are times where I will trade the dollar index, and UUP is the most optionable dollar ETF if you want to trade smaller, right? If you're trading the dollar, that's probably where most people would end up. Disney. Yeah, I got no interest in Disney. Disney has work to do before I would have any interest in trading into that, most definitely. Okay. We're now, I'm not going to be able to show it until tomorrow. So tomorrow we'll look at the spreadsheet, the record keeping spreadsheet. That's where we are. So Leland, we're on section 7 of 8. We're working on our record keeping, and then we're going to talk about trading goals, and then we're going to start over on section 1. So we just have a ongoing every 8-week cadence of going through a trading plan and building it and fleshing it out and refining it, because that's what it's all about, is that plan. Yeah, what are we working on? We're working on the record keeping portion. Now, if you come in here to the state, I'm going to close this. And if you look over here on the left-hand side of my Discord, remember that we have events here. That's where you can join these things. And then we have all of our channels. And these are the two I really want to point out. Resources, downloads. So resources are anything we use, and that's basically to get the links. So I should put in parentheses links, so you know that that's your links. Downloads, when you click on anything in here, that's just going to grab a version of it, right? So if I come in and I go to downloads and I say, hey, this trading plan, boom, it's right here. So if I click on this, this is going to download me a copy of the trading plan outline right here. It's ready to go, right? And I have all my sections and ready to work, so that's there. If you want a copy of the market posture log, it's there. If you want the stock trading log, it's there. The option trading log, it's there. A copy of the top 10 trading mistakes, it's there. I said I'm going to get these updated. I will. I haven't, because obviously I've been having issues, but we will get our current posture with all the history. You can go back and trace, hey, let me test this. Let me see what, the market was kind of crazy back in August and September. What did the posture do? Yeah, go look. Go look what it did. Right? Stand by it. It's not a crystal ball. It's a nice organizational metric that helps us to see things clearly, to see when things are getting better or worse. So yeah, we saw it. We got out. Did we get aggressively bearish for 10%? No, we didn't. A little bit, little hedge here or there, eased the trading. Right, those are the things we're trying to do. Okay, so then if you go in here to resources, everything we just went through is in here. Our content library. So this is where we have like our trading course and our trading fundamentals course. We have our option fundamentals course. We have videos about the trading plan, videos about the market posture process. Our YouTube channel has all the same videos. If you want to use the charts that we use, here is the sector rotation or major market. Here's the sector rotation. Here is our FinViz basic search. Here's the economic calendar we use. Here's the FedWatch interest rate monitoring tool. Everything is here. Everything is here. I worked hard to get it here. I'm so excited to have it here. All right. Questions, comments, concern. I'm like, where's my Discord? I was just on it. Let me move it back over. Let me get back in where I can see you guys talking. There's my chats. There they are. Anything for a trading platform? Oh, absolutely. And again, this is not a recommendation of the broker because I don't give recommendations of the broker. But your question, Leland, is exactly the right question. Get trading on a paper platform so you can just start making some mistakes, right? People are funny because they think, oh, I'm supposed to try to trade perfectly. Nope, go make some mistakes. I tell people all the time, if I was learning how to fly a plane, first thing I'm going to do is get in the simulator. And I'm not going to try to fly the plane perfectly. I'm going to do things like, what happens if I pull this lever hard this way? What if I hit this button? What if I do this? Can I recover? I want to know what's going on in there. If I try to fly it perfectly and then something bad happens, I'm like, oh, what do I do? I've never seen something bad happen. Let's see some bad things. Let's make some mistakes on paper. So I would say this. I would say go to Charles Schwab. Why Charles Schwab? Because they have Thinkorswim. And Thinkorswim is what I've used for almost 20 years now. 18 years now. And Thinkorswim has a paper trading platform. So you can open an account with them, download it, and you don't have to fund it until you're ready to fund it. And they'll say, hey, you can say, hey, I'm gonna play with the platform, make sure everything looks good, kick the tires, pop the hood. But yes, that's what I would say. Most places now have paper trading. I think they do, right? I think they do. Maybe I'm wrong. This one definitely does, and that's the platform you're going to see. So it's going to make it easier for you to replicate, ask questions, things like that. And God, what a you're on exactly the right path, my friend. That's it. Get a. Now here's what I would say. This is what else I tell people when it comes to paper trading, and you do have the ability to do this with this account. If you're going to be trading a $10,000 account, don't paper trade a $100,000 account, right? If you're going to trade a $10,000 account, then reduce the value, and they can walk you through it, or you can watch a video on it. Take your paper trade and make it exactly what it's going to be. So it just looks and feels like it's going to look and feel when you go live. That's the point, right? Is let's make this thing look and feel like it's going to be when I have actual skin in the game, so that I'm adequately prepared. Okay. Yeah, great session. I love where we are. We're bullish, slightly more so. We've got a number of setups across multiple sectors, so I think we'll probably see some alerts popping that we haven't, with the market having kind of gone into its little sideways mode. I told you I'm not gonna put directional trades on unless it makes sense. So things will ebb and flow in our alerts, but I'm definitely thinking that some are going to come on tomorrow morning, usual time, and I think we're going to have Glenn join us Wednesday morning and conduct the Wednesday morning session as we get him more integrated. So awesome. It's great to see you guys. Have a wonderful rest of your day. Leland, glad to have you. Can't wait to have you participating. As always, everybody, happy trading.